This 60 cents battery stock could explode in 2026. No one is talking about it. What if I told you that a tiny stock trading under just $1 is quietly positioning itself inside one of the fastest growing industries in the world right now, and almost nobody is talking about it? There is no hype, no headlines, and no mainstream attention surrounding it at all, which makes it even more interesting. Because usually when something is everywhere in the news, it is already too late for the biggest gains. But when something is quiet and overlooked, that is often where the real opportunity begins. Right now, this company is moving in silence, while the majority of investors are distracted by big tech stocks and trending names. And that is exactly how early opportunities usually look before they explode. They are ignored, underestimated, and sitting right in front of everyone without being noticed. And by the time people finally realize what is happening, the easy gains are already gone. So the real question is not whether this company is popular right now, but whether it is building something valuable behind the scenes. Because popularity does not create long-term growth, fundamentals do. And this company has started showing signs that something real is actually developing, which is why it deserves a closer look. Now I know what you are thinking. This sounds like another typical penny stock story with big promises and unrealistic expectations. And to be fair, most penny stocks do follow that exact pattern. They make noise, attract attention, spike quickly, and then crash just as fast, leaving investors stuck. That is the cycle most people have seen again and again. But every once in a while, something different appears and breaks that pattern. Not because of hype, but because there is actual progress happening inside the company. Real numbers start improving, real products start launching, and real expansion starts taking place. And when that happens, the story changes completely. Let's zoom out for a second, because understanding the bigger picture is extremely important here. The world right now is going through a massive transformation driven by technology and energy demand. Electric vehicles are becoming more common, solar energy is expanding rapidly, and AI data centers are consuming more power than ever before. All of this is creating a huge need for something very specific. And that something is energy storage, because none of these industries can function efficiently without it. Batteries are becoming the backbone of this entire transformation. Without better storage solutions, electric vehicles cannot scale. Renewable energy cannot stabilize, and data centers cannot operate efficiently. This is why the battery industry is becoming one of the most important sectors in the world. Experts are already projecting that this market will grow into a massive multi-billion-dollar opportunity in the coming years. And whenever an industry grows this fast, it creates space for smaller companies to rise quickly. Not every winner will be a giant corporation. Some will start small and grow aggressively. That is where things start to get interesting for investors. This is where smart money begins to shift its focus, because the biggest companies have already made their moves. The real question becomes where the next wave of growth will come from. And often it comes from smaller companies that are still under the radar. These are the companies that have room to expand rapidly if they execute correctly. Smart investors are not just chasing what is already trending, they are looking ahead. They are trying to identify companies before they become popular. Because once something becomes obvious, the biggest gains are usually already gone. The real opportunity lies in finding potential before the crowd arrives. So what exactly are we looking for in a company like this? First, it needs to show real revenue growth, because without that nothing else matters. Second, it needs to be expanding into new markets, which shows ambition and scalability. Third, it should be developing new products that can drive future income. And finally, it should be operating in an industry that is already growing fast. But there is one more important factor that cannot be ignored. The stock should still be trading at a low price point, because that is where the highest percentage gains are possible. A move from $1 to $2 is a 100% gain, which is much easier than a large company doubling in value. That is why penny stocks attract so much attention despite the risks. And now, after looking at all of these factors, there is one company that starts to stand out. A company that fits into this exact setup while still being largely overlooked by the market. A company that is quietly building in one of the hottest sectors right now. And that company is Xpion 360 with the ticker XPON. This is a small company focused on lithium-ion battery storage solutions, which puts it directly inside the growing energy storage industry. While bigger companies dominate headlines, this one is still flying under the radar. And that is exactly why it becomes interesting at this stage. Because early attention often leads to early opportunities. Now let's talk about the numbers, because this is where things start to become more real. The company recently reported a significant increase in revenue, showing strong growth over a short period of time. In fact, it grew by more than 70% in a single year, which is not something you see often in companies this size. That kind of growth immediately grabs attention. But growth alone is not enough because many companies grow without improving their overall financial health. What makes this situation different is that the company also managed to reduce its losses. This shows that it is not just expanding but also becoming more efficient. And that combination is extremely important for long-term success. When you see a company increasing revenue while cutting losses at the same time, it signals progress. It means management is making smarter decisions and moving in the right direction. And for a penny stock, this kind of improvement is rare, which is why it stands out compared to others in the same category. Now let's look at how the market reacted to this information, because that tells another part of the story. After these results were released, the stock experienced a noticeable upward movement. It did not just move slightly, it jumped aggressively in a short period of time. That kind of reaction usually indicates growing investor interest. When a stock starts moving like that, it often means that people are beginning to pay attention. And attention is one of the most powerful forces in the market. It brings in new buyers, increases volume, and can create momentum. And momentum is what drives many of the biggest moves in small stocks. But this story is not just about what has already happened, because the future potential matters even more. The company is not staying limited to its original market. Instead, it is expanding into larger and more demanding sectors. This includes industrial applications and construction-related energy solutions. These areas represent a much bigger opportunity compared to its initial focus, because larger-scale projects require more advanced and higher-capacity battery systems. And if the company can establish itself in these markets, it opens the door to significant growth. This is often how small companies transition into bigger players. On top of that, the company is actively working on developing new battery products. These products are expected to launch in the near future and could play a major role in driving revenue. New product lines mean new customers and new sources of income. And in a fast-growing industry, that can make a big difference. Innovation is extremely important in battery space because technology is constantly evolving. Companies that fail to innovate quickly fall behind. But companies that stay ahead of trends can capture larger market share. And right now, this company appears to be pushing in that direction. Now let's talk about the short term, because this is where things can become unpredictable. The company has upcoming earnings which will act as a major test. This is the moment where all the progress and expectations are put under scrutiny, and the results can have a strong impact on the stock price. If the company continues to show strong growth and improving numbers, the stock could gain momentum quickly. Positive earnings often act as a catalyst for further movement. But if the results fall short of expectations, the reaction can be just as strong in the opposite direction. That is the reality of these types of investments. This brings us to one of the most important parts of the discussion, which is risk. Because no matter how promising something looks, it is still a penny stock. It does not have the stability of a large established company, and it operates in a highly competitive and rapidly changing industry. There are no guarantees here, and that needs to be understood clearly. High potential always comes with high risk. Prices can move quickly in both directions, and volatility is part of the game. This is not the kind of investment where you blindly jump in without doing your own research. But at the same time, risk is what creates opportunity. If there was no uncertainty, there would be no chance for explosive gains. The key is understanding what you are getting into and managing that risk properly. Because informed decisions always have a better chance of success. So when you put everything together, the picture starts to become clearer. You have a company with strong revenue growth, improving financials, and expansion into larger markets. You also have new products in development, and a position inside a rapidly growing industry. And all of this is happening while the stock is still trading under $1. That combination is what makes this situation worth watching closely. It is not a guarantee of success, but it is a setup that has the potential to lead to significant movement. And setups like this are exactly what many investors look for, because they offer both risk and reward in a unique way. So now the question becomes whether this is just another small company trying to survive or an early-stage opportunity that has not been fully recognized yet. Because the market eventually discovers growth stories. And when that happens, attention can drive prices much higher. If you like my efforts for your growth, please make your little effort for my growth. Like the video, subscribe, and comment what you want next.